Hey, this is Awais with OpenTrader, and this market analysis and outlook video is being shot very early in the morning on Thursday, December 6th. Now, before we jump into our analysis for the next couple of days, let's quickly review our last outlook post that was posted early in the morning on December 4th. So the expectation was for responsive buyers to be active at the 1400 high volume node, as well as the support areas below it on first test. And then the key levels we were using above 1400 were 1407.5, 1411, and then the 1413.5 to 15.5 was a key inflection point, and we were going to look for either failure or continuation to the upside there. So that was a key area in the market that we were tracking. Now let's see how the day played out. We can see that December 4th we failed right around 1411. Headed lower, found responsive buyers a little bit ahead of that 1400 high volume node, rotation back up towards that 7.5 level. The following day, we broke below 1400, found support right near the value area low of the current composite that we're tracking, and got that push up towards that key inflection point of 13.5 to 15.5. which is the composite VPOC on the current composite profile, and then responsive sellers were active over there for a push back down towards this 6.5 to 7.5 high volume node. Now, heading into the next couple of days, the key economic catalyst is the non-farm payroll report out in pre-market Friday morning. So the idea is that we will continue balancing on Thursday, and then we'll look for a directional move outside of this 93.75 to 22.75 range on the non-farm payroll report. So our expectation going into tomorrow is that the market will continue balancing between 1400 quarter and this 13.5 to 15.5 area, and then we will look for a directional move. In the event of an upside move, we have these targets above: the naked VPOC at 23.5, the open gap at 25 quarter, and then we have a composite high volume node around 28. In the event of a downside break below 1400, we'll look for a move towards this 1383 prior significant low, and the final objective on the downside will be 1377.75, which is this high volume node down here. So essentially we'll be looking for responsive buyers to enter between 77.75 and 84 quarter. So in this range over here, and these are going to be the downside objectives. So those are our thoughts over the next couple of days. Now let's head over to a question asked by one of our members. So the question was, how do we determine the range that's shown on the right side of the composite profile? So essentially, what determines the range that's being used to establish this composite profile? And to answer that, we'll have to look at the daily chart, just a simple candlestick chart. So essentially what we're doing is, we're monitoring these various trading ranges and balance areas that are being developed over time. So, we can see that we have a significant low over here around 1340 quarter, which came into play on this big move down, right? We have this gap up outside of this range, and then the market essentially balances within this 1383 to 1418.75, kind of this range. And then there are, these micro balances within it. There is this key upside breakout on November 6th. And then we have another, we consolidate again in a tight range, and then another breakout on September 13th. And then we remain and balance within this range for, a few weeks, and then get a breakdown below balance, retest, rejection of this balance area, and then we head lower. So, essentially the market is developing these various trading ranges, brackets, balance areas, whatever you want to call them, over time. Now, to answer what range we use in the composite we show in our Outlook videos, we tend to focus on the next 2 to 3 days, right? We tend to project out what we expect over the next few days. So we use a very short-term composite profile, right? We look at just the very recent market activity, and we look for significant highs and lows to determine which range we should use, right? For example, for this video, we were using the 1372 as the low. So we were essentially using November 19th as a start date because we're really interested in what's happening in the market since this key reversal, right? Which occurred on November 16th, or this gap up on the 19th. You can use either date, doesn't really make much of a difference, but we're really interested in how the market is behaving since that key breakout, right? And short term, that's the little mini auction that we're trying to monitor. Now, we're still cognizant of the activity that's happened prior to it, and we don't simply look at one composite profile chart when we're determining our key reference areas that we're looking to trade. So we are looking at multiple views into this chart, right? We are looking at multiple composite profiles to come up with a bigger picture view. But as far as our short-term view, and the ideas that we share in the videos, it's really based on the recent market activity, and we use significant highs and lows on the daily chart to determine, which balance area we should use, which little, range in the market or auction we should use. And, that's what we present in the videos. But there is more analysis that goes into coming up with a larger picture view. And, some of the levels that we have highlighted on this chart are actually outside of this range, right? They're in the balance area prior to this whole breakdown and move back up. So it's not necessarily a scientific way of just determining where we start or where we end. It is a blend of art and science, and looking at the market in just various dimensions and coming up with these views. But typically short term, if you're looking at the market, what it's likely to do over the next couple of days, you want to have that bigger picture view and then zoom in on the recent market activity because that's likely to produce very good day trade setups. Now, if you're a swing trader or position trader, you're going to use a very different trading range to come up with your analysis, right? Because you're playing on a much larger time frame. But for the short-term day trade setups, we tend to use and focus on the recent market activity, and then we look at the broader market context and bigger picture view to establish some stronger support and resistance zones. So I hope that answers your question. If you have any further questions or need any clarification, feel free to post it in the comments, and we will either address it there or cover it in our next video. Hope you found this helpful, and good luck over the next couple of days, and then we'll catch you on Monday. Take care.